This is a chart of gold. I'm long gold from this general area in here. It's had a really nice rally. That's about $14,000 a contract. Now, the black line is a seasonal tendency. This is how gold usually rallies. I first wrote about this in 1973. So we had a pretty good idea it should rally at this time period. The red line is my goes beyond seasonals. It's the natural cycle in a market. And it also, like the seasonal in this case, says we should continue rallying until the middle of September.
Why does gold tend to rally in October and September?
Well, I don't know the reason of why that it does, but I know over the years it usually has rallied. Typically, when we have a seasonal tendency in the market, it's because there's some commercial function behind that. This is the time that production perhaps dries up, so we don't have as much, or maybe it has something to do with the fact bonds usually rally at this time period. So the exact reason, I really can't tell you, but I do notice that this was a seasonal tendency to decline, and that's what the market's done this year. And most of the time, the market follows a seasonal pattern. Not always, but we can get these hot spots, like with my cycle stuff down here, that says, yeah, there's sell signals all over in here. So currently, I'm in a buy mode with it. And, oops, that's not a good view for you. Let's see if I can do this. And I have a target in here where I will liquidate my position. I have resting orders at 1740, 1743, all over that general area. Gold will continue moving up to this price area, 1740 someplace, and then we'll not be selling it short, and I'll have to look. Maybe I'll have another buy point in the marketplace, but I think we have a good move left to that 1740 area. And notice that the small speculators, that's the gray line down here. Look at that. They didn't want to buy at all. They were not buying gold. No. And the red line, that's a large trader. They were buying gold. So it's the same thing we were just talking about. When you see small speculators, look how bullish they were up here. They're really bullish. They bought the high.
I see, yeah.
So that's why this is such important information to look at.
That sell level, 1741 low. Where does that come from? How do you get that level?
It's just a price pattern that I use in the marketplace. Something that actually a fellow by the name of Gartley did many years ago. I'm sorry, not Gartley, George Siemens. And it's just a swing measurement. It's not Fibonacci, it's nothing like that at all. And it's just, a general price area in the market.
So, I mean, it's going to reach 1741 pretty quickly, I would imagine, isn't it?
Well, I hope so, because I'm long a lot of gold. I don't know if it'll get there. So the other side of that, that's my target, but I have to have trailing stops in the market as well. So I always have a stop in the market. It's trailing right now because of where I'm in from, and I have a target. Either thing can get me out of the market. Okay, so here's crude oil. The seasonal tendency is now going to the downside. My natural cycle also is calling for a high in here, and it looks like we started to roll over. Wow, isn't that interesting? Just as it called for a high up here into a low here in the natural cycle. And we can see the red line, this red line, the commercials were heavy buyers here at the low. The small speculators at the high back here, they were heavy sellers. They were the buyers back here.
Same thing, yeah.
Same thing again. You see it, I mean, I've seen this since 1970 in the market. So right now, we kind of have a mixed bag. The large traders, primarily the funds, the blue line, they've been heavy buyers in here. The gray line, the small specs, they're really confused. They don't know what to do. But clearly the large commercial interests of the world have moved over. They've liquidated their long positions, and they've started hedging, and they have a more negative view about the market now, just as they did back here. But I still don't have an entry in this market. I'm not in it, but as you can see, I'm obviously looking for sell signals.
Okay, so you're not long, you're not able to...
I have no position, but I have orders in, and they just haven't gone to my sell points.
Okay. On this chart, Larry, like the gold chart, you've got this kind of proprietary cycle indicator along the bottom in red.
Yes.
Can I just ask what has gone into that other than the seasonality that is on 2 levels above it? What other factors have you put in?
You can ask, but I won't tell. It's the only really proprietary thing that I have in my work. It's based on a lot of time cycles from the past, based on the overall ideas. Let's find years in the past that look similar to this year, and then let's see what happens the following year. That's a general synopsis of it. But There's a lot more than that into it, but that's the starting point.
But you need to be trading on a kind of monthly basis in order for that to be useful, presumably, don't you?
No, I don't think so. It just gives me a general direction. I know that I should have a rally in here up to about here, and generally speaking, I should see a low here, and I should see a high over here. We can put on any market you want, but that's a general idea behind it.
I mean, you see that peak that we reached in August.
Mm-hmm,
Is that, for example, is that exceptional when it touched the kind of the grid line above it?
mm-hmm.
Was that an exceptional level, for example?
Right there.
There it is, yeah.
Yeah. Well, I mean, this happens all the time with my work.
So that would potentially be a buy signal, quite a strong buy.
No, a sell. I mean, we realize we should start to come down from here to here. So I go, I'm on alert for sell signals. I got to be looking for sells in here. If the other stuff confirms, and in this case, it certainly does.
I see. Okay. And this kind of setup that you have here, where you've got the 4 panes, and is that pretty much what you use for trading all the markets that you trade?
Yes, and I think that's what separates me from virtually every other teacher out there as well as trader. Not only do I actually trade this stuff, I do teach it. And the real difference is everybody else is just looking up here. They're looking here at price. And I don't look there at all. Well, I mean, I look there, but to me, it's what happens below the charts down here. This is what matters, this stuff.
So, you know, all the kind of the array of technical indicators like Bollinger Band and Elliott Wave and RSI and all the rest of that, you don't really use it that much, do you?
I don't use that. That isn't to say they're not good. It's just to say that I haven't found a way for myself to make them work. That isn't saying that somebody else can't. I just have found over the years I like real fundamental conditions that drive markets. That's my main concern. Find the conditions. Then you can bring in all the technical stuff is the same. My percent R 14-day looks just like the Bollinger B 14-day band. It's all the same because we're massaging the numbers with about the same data. So it's regurgitating time after time. All this stuff is basically saying the same because they're just looking at price. But there's more to understanding the markets. What's down here drives what's up here.